Hello, welcome to the European Open Briefing for Tuesday, February the 6th. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be taking a look at the latest developments in the currency markets today. So the global sell-off in equities continues this morning. Asian markets fell sharply, and European stocks also have opened sharply this morning. It follows big losses on Wall Street yesterday, where the Dow Jones plunged by 4.6%, and in Asia this morning, the Nikkei in Tokyo closed down by 4.7%. The dollar is broadly firmer against most major currencies, as the risk of appetite is boosting the dollar versus most pairs, but it's down against the yen, which is the main beneficiary of the risk of sentiment in the markets this week. Among other currencies, the pound, the loonie, and the Aussie are the worst performers. We did have an RBA policy meeting this morning where the central bank in Australia held rates, but the Aussie is still feeling the pressure versus the greenback. Let's move on to the US dollar now. We can see in the chart the dollar index has been heading higher this week. It did hit a near 2-week high of 89.72 as it rises against most of its major peers. The dollar yen, though, we can see, although it was climbing up until the end of last week, it has come under pressure this week. It did briefly hit a 1-week low of 108.43 before recovering back above the key 109 level. So we had another massive sell-off in equities yesterday on Wall Street, but we did see a reversal in treasury yields as the risk of sentiment basically drove investors to safe havens such as US government bonds. We saw the yield on 10-year US Treasury notes falling to as low as 2.648% before recovering back around 2.75%. And of course, yesterday, those yields hit a 4-year high of 2.89%. The main risk for the dollar at the moment is the potential vote in the House of Representatives, where the Congress will vote on another short-term funding bill. The current one expires on February the 8th. It's likely this will be another short-term one to extend funding until March the 23rd. This doesn't seem to be gathering much attention at the moment, but if we were to see a potential shutdown, that would possibly add to the risk of mood. And moving on to the stocks now, we can see here the Dow Jones in orange, that big drop yesterday. It's actually its biggest drop in terms of points in its history, and its biggest percentage drop since 2011. We can see it briefly fell below the key 24,000 level before closing at 24,345. The Nikkei also came under pressure this morning. It fell by 4.7%. It actually had fallen even more at one point before it recovered to close at 21,610. The yen, although it has paired some of its gains this morning, was up sharply yesterday and early Asian trading. The gold and Swiss franc haven't seen as much demand from safe haven flows. The Bank of Japan Governor Haruki Kuroda once again is attempting to talk down speculation of an early exit from QE. Speaking in the Japanese parliament earlier today, he did say that Japanese inflation hasn't even reached 1%, so it's inappropriate to prematurely shift monetary policy just yet, though this didn't have much of an impact on the yen. Moving on to European currencies, we can see the euro is attempting a rebound. It did briefly fall below the 1.24 level, hitting a low of 1.2349. It's currently trading at 1.2417. Draghi's comments yesterday at a hearing in the European Parliament did add slightly to the euro's woes yesterday. He said new headwinds have arisen from the recent volatility in the exchange rate. That was perhaps his strongest comments yet as far as the euro's recent appreciation is concerned. But overall, since we're continuing to see solid data out of the eurozone, the euro remains fairly well supported at the moment. The pound, on the other hand, is facing fresh uncertainty over Brexit. The UK appears to have ruled out the customs union Union, and Michel Barnier, the EU's chief negotiator, who was in Downing Street yesterday, said that it wouldn't be possible for the UK to have frictionless trade if it leaves the single market and the customs union, saying that UK the time has come for the UK to make a choice. Also, we are continuing to see fresh speculation about Theresa May's future as Prime Minister. So all of that pushed sterling to below the 1.40 level to 2-week low 1.39, 35. It's a little bit firmer this morning at 1.39. 75. And looking at the Australian dollar now, because we did have the RBA policy meeting where they kept rates unchanged at 1.5% as expected. They were fairly upbeat about the economy overall. The statement wasn't too different from their previous one back in December. Household debt and spending remains a concern of the RBA, but the central bank is confident that growth and inflation will pick up during 2018. We also had better than expected retail sales numbers out of Australia for the fourth quarter. So all of that did provide some support for the Aussie, which is in fact one of the worst performers against the greenback. It did touch a 4-week low of 0.7832 earlier today, before rising slightly to around 0.7880. The Kiwi isn't doing too badly though. It's actually up 0.7% against the greenback. That's pretty impressive given the overall performance of other commodity-linked currencies. That could possibly be due to weakness in the Aussie-Kiwi pair, which is helping the dollar cross. We have dairy auctions coming up later today, which could also impact the Kiwi, as well as fourth quarter jobs numbers much later in late US session, early Asian trading. And finally, let's take a look at the loonie and oil prices. The loonie has come under slight pressure from the sell-off we're seeing in oil prices this week. Also impacting the loonie is ongoing concerns about NAFTA and the fact that the Bank of Canada probably won't have to hike rates as many times as previously anticipated. The loonie is down 2% though versus the greenback. It did touch a near 4-week low of 1.2565. It has firmed slightly to around 1.2511 at the moment. We've got a number of Canadian data coming up later today, as well as the employment report on Friday. And quick word about oil prices. We can see WTI here falling to a 2-week low of 63.29 before recovering slightly to around 63.88. Brent crude is down more steeply. It touched a 1-month low of 66.82. So apart from the risk-off sentiment, rising US output is also weighing on oil prices, as well as, of course, a stronger US currency, which makes general commodities much less attractive. And let's see what's coming up later today. We've got the dairy auction for New Zealand, US trade data, as well as Canadian trade data, the IBPMI out of Australia, and those jobs numbers out of New Zealand later on. That's it from me. Thank you very much for watching and have a great day.